Good morning, everyone. Dan Bossy and Ben Buckner back with you here to discuss the grain markets. And interesting they are. I mean, we had the USDA crop report on Friday and assured yields. And then right after that, Trump made his announcement that China was going to buy beans, and they have bought beans. We have a 792,000 sale here this morning from USDA. Came out a little late because of cloud problems and internet problems, but nonetheless, we'll go from it, remembering that you've got 48 hours to announce these sales. So there's probably some more coming. But at least in my checking with cash sources this morning, I'm not finding any early Chinese demand. It doesn't say they can't come back. But, I'm putting the total somewhere between 14 and 18 cargoes that were sold yesterday, mostly off the Gulf and PNW, all off the Gulf and PNW, all the way out till, let's say, April or May. And so, maybe there was nothing done in July, but the Chinese are not happy about buying these soybeans. They don't need them. They are stuffed to the gills in China with soybeans. They got to somehow rotate their reserve supplies to find room for them. They're fearful that as they sell their old reserve supplies, because of livestock prices are so cheap and there's so much meal and oil availability within China, that they're going to lose lots of money. So on the purchase side of the United States, everybody needs to understand it's not commercially viable. The government, as they're buying U.S. soybeans, are losing about $1.10 to $1.20 a bushel on a landed basis before the tax. Now, China's not going to pay itself the tax. This is a government transaction. If you're a private crusher, you're moving to South America. And as I suggested on our early wire, when you look at the soybean market, although we rallied 30 cents in Chicago yesterday, Brazilian premiums were down 15 to 25 cents. And so that spread between the United States and Brazil just keeps getting wider and wider and wider. And I would imagine you're going to look at Europeans and others start to switch some cargoes from the USA down to Brazil because of cost. So Ben, kind of lead us to where we need to go. But that this Chinese question and policy is something that I think will have ramifications on the road. Maybe more importantly, we'll talk about crush and what to do with all the soy meal.
Yeah. And it is, I think politics are kind of dominating the market today. Politics are important, so we can't dismiss them. But I do think, and a lot of people are aware of this, the Brazilian discounts, Brazilian soybean supplies. And I do think that's important longer term. Dismiss that at your own peril when we think about the next, 4 to 6 months. But yesterday, I think adding some fuel to the fire, U.S. crush, pretty incredible. 228 million bushels from the NOPA members, which is about what actual crush is now. We think that this is 99% of crush capacity instead of 94, 95% in previous years. But in any case, we raised our crush estimate 25 million bushels. We're now 15 million above USDA just because the pace is so good. Margins are intact. All-time record, up 28 million bushels from last year, et cetera. The math is certainly supporting upward revision. So this is adding to some of the sentiment, I think. And you do see basis levels near or at crush plants doing better than a lot of river locations or interior, northern plains, upper Midwest soybean bases. And that makes sense. I think the crush guys will do pretty well indefinitely. And this is also policy. I do think this is reflective of the return, very likely, of renewable diesel, biodiesel growth. So also in the NOPA report, kind of backed into oil consumption, an all-time record 2.6 billion pounds. This is, I think, pretty clearly the advent of 45Z slowing imported feedstocks for biodiesel production. And we've kind of highlighted in the newsletter that we're using a lot more soybean oil as a feedstock to meet renewable diesel production today. That probably expands in 2026. So the byproduct is we are producing an incredible amount of soybean meal. So even in October, 5.4 million tons, a new all-time record, up 15% from last year. Let's take a look at the last 3 months, just incredible volumes, also up 15% from last year. So this is being made to disappear. I think just how does it get done? And it's going to be at pretty low prices. And that probably continues. Even thinking about the soybean meals kind of tagging along to the soybean rally. That started kind of in earnest about August 25th. So soybean meal was cheap in the month of October, which I think the reason why is because we just had an incredible amount of the stuff. Seasonally, we're going to produce even more soybean meal on a per day basis over the next 2 months. So how do we get rid of this stuff? We've got to be competitive. And like soybeans, something that we've highlighted and we should think about when we think about the next quarter or so is just how cheap South American soybean meal is. So those discounts are also pretty wide. Brazil especially just offered. That market is priced to sell. So how do we, the U.S., start to get rid of this stuff? I think it's something we think about, especially as we kind of turn the calendar over to 2026. Crush very good. We think this is an oil story still. Oil share of crush probably bottoming where it is now. So we like oil, don't like meal as much just because of the need to find really record demand indefinitely. And so that's just going to be a function of price that we think. Otherwise, we've also seen some volatility in the river soy market. I'd say that it's been unremarkable. So last couple of years, you've had very weak bases at places like St. Louis, Owensboro, recovers very quickly during or just after harvest. But in the last couple of days, we saw, what was concerning to us last week was this reversal in river basis strength. You dropped 15 or 20 cents along those river terminals. We're back up 15 cents. St. Louis bid 15 over today, was 0 last week, but was 35 over a year ago in November. But I think this is also kind of part and parcel of the chaos, the uncertainty, the politics behind, are we selling soybeans to China and how much? So this isn't really giving us a lot of long-term guidance, but I did want to highlight the changes we've seen and also just how it compares to history. Again, I'd say it's been evolving pretty normally. I don't see a lot of excitement when we isolate spot basis by itself. So I do think the soybean market, again, politics, short-term versus long-term. I think what matters most to us when we think about pricing soybeans for end users and for the producing community, South American weather. Politics are incredibly important, but the list goes weather first. I think a distant second, politics, then everything else, even a farther distant third. December weather, we can kind of quantify how critical it is to South America. So what you're looking at here is just plotting November rainfall in Mato Grosso against yield performance on the left, and on the right, you've got December rainfall in Mato Grosso against soybean yield performance. So the November chart, of course, pretty scattered. You can have dryness or very favorable wet weather in Mato Grosso in November. It doesn't mean a whole lot for yield, which I think is interesting because we are dealing with some pockets of dryness, but that hasn't really determined yield really in any year the last couple of decades. It's December. So you can kind of see, too, you quantify, if you get 6.5, 7 inches of rainfall in Mato Grosso in the month of December, even that's below normal, you're kind of locked into trend yields. And CONAB today is forecasting yield just a bit below trend. So if normal rainfall happens or is recorded in Mato Grosso in December, it's called 7 to 10 inches, you're probably adding a couple of million tons to Mato Grosso soybean production forecast at least. So this is what we're going to be watching hyper intensely. And even this weekend, the operational models will start to peak into the first week of December. So I think this is where focus should go just as much as it is on Chinese purchases of U.S. soybeans. And even in Argentina, they've planted 35% of their corn so far. The rest will be planted between the end of November, about Christmas. But December weather over time has been paramount to what happens in terms of Argentine corn yields. I think that's pretty easy to explain. The entirety of the first crop pollinates in December. But I guess you're setting the stage too. We found that what happens in December generally happens in January as well. So that's why I think you see this correlation be so tight. But I just wanted to communicate pretty clearly that you can see what happens. It's not, there is some nuance here, but if it rains 3.5 inches across Argentina's corn belt in the month of December, you're probably dealing with trend or above yields nationwide. I think that's the story here. So that's what we'll be watching kind of starting this weekend and over the next 2, 3, and 4 weeks. But if it does rain 3.5 or 4 inches in Argentina in December, just keep in mind that probably the USDA's forecast is not just a little too low, but 5 or 7 or 8 million tons too low. So this is critical for both sides, whether it's dry, whether it's wet in Argentina in December. I think is going to be the next real catalyst for corn prices, especially in Q1 2026. And kind of lastly, as we get to that point, just wanted to highlight all is well so far, assuming the 12-day forecast is correct. Everything looks pretty normal. Soil moisture surpluses very much in place in Argentina, Paraguay, southern Brazil today. So any dryness we see in the next 10 days, and I know La Nina is around. I think it is absolutely perfect for those crops. And then the monsoon just kicks into high gear in Brazil, and that is imminent. So as we've talked about before, it's very hard to have problems in Mato Grosso. I think it's been 1 year really in the last 3 decades that you've had dryness in December. So it's been chaotic. There's more chaos coming. We've got South America's weather market, whatever that will be, staring at us in the face.
Good rundown, Ben. Appreciate the weather view because I do think it's important as we head into December. I would imagine by the next couple of days, we'll get this Chinese buying out of the way and we'll maybe have the policy on the back burner and then start to look at other things going forward. But I got to tell you, what really bothers me is when you see soybeans in Brazil offered for February, $1.30, $1.40 underneath the Gulf. It just isn't going to help the U.S. demand profile. So with that, everybody have a good trading day. We'll be back. There's a lot of things happening in the world. Follow us on Ag Resource. You can always take a $1 trial here if you're not a subscriber. We dial it all down and make it simple so that you can understand what to do in the markets. Have a great day, everyone. Be well. Talk to you soon.